A Wedbush analyst gave Sofi a target price of $3. This guy's smoking. That's it. You know what? I'm done. I can't work like this. A company that does a lot of things right: year-over-year growth, increased earnings, as well as acquiring new customers, being able to acquire a charter and become a bank unlike any other fintech, acquiring other companies in the back end to help them with the tech and the infrastructure. However, is held back by market manipulation, a CEO that's very conservative yet very smart, and a lot of manipulations and short selling, as well as fear in the market. It really is a shame because Sofi is a great company, but in this video, I've got some really big news, and it looks like it's the start of a new beginning for Sofi. So stick around, strap in, because this is going to be interesting. Welcome back, everyone. Corey here. Thanks for stopping in. Be sure to subscribe, tap the bell, and give me a thumbs up, as it greatly helps the channel grow. I told myself that once I achieve financial freedom, I would do everything in my power to help others get the same success, which is what drives me every single day. So if you guys are looking to improve your portfolio, whether you're a beginner, intermediate, if you're looking to learn, improve, grow, and achieve financial freedom, I would love to help you. If you guys are interested in joining my one-on-one coaching at any time, you guys can do so at investwithcorey.com, right there on the screen or in the information box below. I would love to help you grow your portfolio and achieve the financial freedom that you deserve. If you guys are not really ready or unsure if you guys want coaching or to learn, you can also sign up for my newsletter in the information box below with free updates delivered right to your email box every single week. All right, guys, it's time to talk Sofi. I have got my notes, and I also want to talk to you guys about some really awesome news that happened today, or that came out today on Sofi. So let's talk about the CEO. Very smart, never sold a single share, and has spent almost $1 million buying shares and accumulating them in 2024. He also owns 8,121,000 shares. Typically, when insiders continue to buy shares over and over and over with no real selling, specifically in this case, Anthony Noto, CEO, this signifies that he believes he's going to make profits on the shares, which in turn means the stock price is going to go up. Their financial businesses sector is growing pretty rapidly, and it's a lot easier to scale that than a lending business. However, there's a lot of short selling. Cutter Investments dropped a boatload of shares, specifically 134 million in shares. There's a lot of selling pressure, as well as market manipulation and shorting going on, which really upsets me because Sofi is actually a very good company that's doing really well. In fact, they have a great CEO that said that this is a transitional year for Sofi, but not only that, they are still making profits. Overall, this is a very good growth stock. However, it's a long-term investment, 1 to 2 years, absolutely minimum, probably more or less 2 years. Sofi's revenue has increased 26% year over year. In Q1 2024, Sofi also added 989,000 products for a total of 11.8 million. Their EBITDA rose 9%. Total deposits grew 16%. They have a bank charter. They are now officially a bank, not just a fintech. Sofi also acquired Galileo and Technisys, which means Sofi actually provides back-end infrastructure to other fintechs. This allows Sofi to also run simultaneous products and back-end infrastructures and cloud management, data management in real time. The list really goes on and on for Sofi on the good news, but there is some bad news, and Cutter Investments dropping 134 million in shares and all the short selling pressure, as well as the manipulations on Wall Street with Sofi, is pretty apparent, and I think it's absolutely because of the fact that this is such a good company that is operating not only correctly, but in the exact direction you would expect from a small growth company growing into a bigger company, acquiring a charter, acquiring Galileo, acquiring Technisys, becoming a full-fledged bank overall and no longer a fintech. Yet it seems like Wall Street, the analysts, and the manipulators of the market just want to short and hold Sofi down. However, Anthony Noto is a very bright and intelligent CEO, and it looks like he's on the right path to growing this company the correct way. And very fortunately, it looks like there's going to be a short squeeze in the next 6 months to a year, maybe sooner, on this stock because some analysts are now jumping on board and giving a price target of $10 or more. I want to read this verbatim for you guys. Needham analyst Kyle Peterson reiterated Sofi Technologies with a buy rating and a $10 price target. Peterson is impressed by Sofi's interchange revenue growth and noted it as a sign of strong user engagement engagement in its core customer base. While interchange is a small piece of the overall business, the analyst expects it to remain one of SoFi's fastest growing products. Given its lower capital intensity and lack of credit risk relative to lending, the business should be valued like a payment asset, as per Peterson. The analyst expects interchange to garner attention as it grows and becomes one of SoFi's most significant fee income streams. Peterson also noted that SoFi's tech products and solutions segment is underappreciated by the market and views it as an adding incremental growth vector, while also allowing SoFi to diversify into adjacent products and international markets without taking additional credit risk or committing balance sheet capital to fund these efforts. This is big. The analyst noted this segment is a key to expanding SoFi's overall valuation, as this segment has a software revenue model which will garner a higher multiple relative to the core lending business. Given the healthy growth runway, Peterson's updated model assumes higher expenses, especially in the tech and product development. Peterson's projected that the second quarter's adjusted revenue and EPS will be $561.4 million. Long story short, this analyst believes in the growth of SoFi. So you guys can see that SoFi really does have a lot of potential. This analyst, just being one of them, understands the potential of SoFi in the coming 6 months to a year or even 2 years. This is a long-term investment. However, in the short term, we could see some movement as it's now targeted as a buy with a $10 share price rating. That means at any given point in time, share prices could go up. And considering earnings is just around the corner, I would say that right about now is a good time to buy, considering the stock has a really big support, or pretty much a floor, at $6 and $6.50. Okay, let's take a look at SoFi. We can see since June 14th, the past 2.5, almost 3 weeks, it's pretty much consolidating between $6.20 and $6.70. This 50-cent consolidation is really not a good sign to investors that the stock is going to be going up or it's going to become profitable. However, to an experienced investor, this is somewhat good because the stock won't go below $6.20, which means pretty much everybody feels that SoFi is worth more than $6.20 or $6.50. And there is a lot of strength at the $6.20 mark as well as $6.50 mark. It's hard to say exactly when SoFi is going to go up, but with a price target rating updated yesterday of $10, it's likely with that combined with earnings coming up real soon that the stock price is going to start to move up. Earnings is coming up on July 30th, which means now is the time to buy if you intend to get into SoFi. If they match the earnings of 0 cents or 1 cent EPS, then the stock is likely to trend higher in the week leading up. However, if the earnings beat the estimate, then this stock is likely to go up even more. So let me show you what I anticipate. With earnings at the end of the month, I'm going to go to the 4-hour chart. I anticipate a little bit more consolidation like this, but I do anticipate that the 100-day moving average is going to come down somewhere like this. And as we get closer to like July 15th, 17th, next week sometime, it's going to break above that, come back, retest, and then we're going to start to go up like this for earnings. Something similar to that. It's not going to be identical, but this is what I believe is going to happen. If they meet the earnings estimate or beat it, especially if they beat it, then the stock price is going to end up somewhere up here. It's going to be over $7, maybe even higher than that. If they miss the earnings by really any amount, even 1 or 2 pennies, then the stock is going to fall back down, consolidate and fall, and we're going to be back down in like the 620 range. So it's really critical on earnings. However, if you're looking to get in with potential to gain profit, then you can see all of this potential move if the earnings are good. But the time is now, because we've already seen that the lowest point the stock has gone is around 630 and the current price is 645, which means now is the time to buy. There is no reason to time any bottom. There's no reason to hold out anymore. If you want to add shares or you're not invested in SoFi and you're thinking about doing it, this is the time to do it. The price is perfect. You can buy 100 shares for $645. The price is $645 and it's unlikely to go below $630. So are you really going to hold out and wait for 15 cents? I wouldn't. So here we are looking at SoFi. We're just going to buy shares and then I'm going to tell you guys to hold and not sell any covered calls. Because if you sell a $7 covered call for July 26, you could sell a 7 for $11. That's it, $11. And then if SoFi goes to $8, then you're stuck having to roll out several months because there's not a lot of implied volatility in this stock right now. And then when the IV goes up, it's just going to decimate you because the IV right now is low. The implied volatility is 44%. About a week out of earnings, it'll go pretty close to 100%, which means this call contract right here becomes like more valuable. So right now you get $11 if you sell this call. Even if the stock price stays the same, a week from earnings when implied volatility goes up to 70 or 80%, this call is going to be worth a lot more. In fact, I'll look at it right now with Vega being 0.004. 10% would put this at a 50-cent increase. So we're looking at about a $2 increase, $3 maybe. So even if the price stays the same, in the next 2 to 3 weeks, this is going to become more valuable and be $15, $16, $17 because you're going to add that in with the price fluctuation of the stock. The stock goes 670, 680. This is now going to be worth double or triple what you got paid for it. So you're going to be in the negative 60% on this. So it's not a good idea. What I highly recommend doing is waiting till earnings for the stock price to go all the way up, then sell it for a profit. Or if you're staying long term, wait for things to cool down at earnings, maybe a couple days after, and then sell a $7.50 call or $8 call a few weeks out. If you're looking to only make profits from the stock, but not really enter it, you don't care if you get assigned, but you really just want to make profits, then I would go out to July 26th or even August 2nd, and I would sell put, and I would come down here and sell a $6 put for $25 juicy premium. You could go ahead and sell as many contracts as you want. Me personally, I would sell 10 because this is only about $6,000. You can make $250 juicy premium for a few weeks. This is pretty good. This is about a 4 to 5% return in a month, which is very safe. The likelihood of SoFi going below 6, they would have to miss earnings, not just match it. They would have to miss completely for it to go to $6. If they meet the expectation, bare minimum, just meet the expectation, there's no way the stock's going to $6. So this is a pretty safe bet where you could just generate another $250 juicy premium, and it's a really good play. If you're looking to get into the stock, but you want to get paid to get into the stock, and if they miss earnings and the stock price goes back to 630, then you could sell a 650 put, click continue. I would, again, sell 10 of these. I'd collect almost $500, and my average price would be 48, so my break even would be $6.02. So as long as the price stayed above 602, I'm getting in and I'm in the green. So you could sell these puts. The stock price could go down due to a missed earnings and go to $6.20, and you're still up $18 even though you got assigned. Then you could just turn around and sell them and you're up $18, or hold them and sell $6.50 calls. Either way, choice is yours, but these are the strategies to implement into your portfolio for SoFi. So if you guys like the way I employ these strategies onto different stocks in my videos and you're looking to learn more and gain more experience, whether you're just starting out or maybe you've been trading for a little while and are not profitable, you guys can join my Discord training course and one-on-one coaching at any time. And I would love to help you with your portfolio. You can sign up at any time on my website at investwithcorey.com, right there on the screen or in the information box below. I look forward to speaking with you. Things are looking really good for SoFi. I really believe that this $10 price target by the recent analyst is a good thing. Hopefully people will understand what a good company SoFi truly is, but also understand that it's a long-term investment, as this is a transitional year. Anthony Noto has said that many times, and this is a very big important factor to consider when investing into SoFi. If they meet or beat the earnings yet again, which they have consistently done, and Anthony Noto, might I add, is very reasonable and very consistent. Very conservative is the word that I'm looking for, because he's very consistent and conservative at the same time. The earnings almost for sure to meet or beat the expectation, then SoFi is going to move in an upward direction, very likely right during earnings and right after. Question is, can it stay there? That's the big question. Can SoFi stay at a newfound price point if it goes up on good earnings? Well, it doesn't really matter if it does or doesn't at this point, because I believe in SoFi and I'm holding my shares and I'm not selling them. As most of you guys probably agree, I believe in SoFi and I know you do too. Thanks so much, guys, for being here. Really appreciate you. Be sure to subscribe, tap the bell if you guys enjoy the content, and give me a thumbs up as it greatly helps the channel grow. And like I said before, if you guys are looking to become profitable in the market, whether you're a beginner or intermediate, it doesn't matter how much experience you have. I would love to help you. You can sign up for my one-on-one coaching, Discord, and full training course. I hope to see you over there soon. This video's over, but don't worry, I've got another video just for you and you're gonna love it. And that video is right here. Click it. I'll see you guys over there. Thanks for stopping in, guys. Remember, until the next video, let's grow our wealth together. And of course, I'll see you over there.